Yeah, well, obviously these are backwards-looking numbers, GDP from the first 3 months this year. But do you think this quarter's faring any better than the previous one? Or?
Well, the big change, of course, is that the Reserve Bank start cutting interest rates. So it has started cutting rates. So we had the first rate cut in February. Now, that's unlikely to have affected the first quarter GDP numbers that come out tomorrow. We've already had the second cut, and I expect some more cuts in the months ahead. So those interest rate cuts are going to be a really important part of seeing a bit of acceleration in economic growth this year. The annual growth rate in the March quarter is probably going to be around about 1.25%. We expect it to be closer to 2% at the end of the year, but that will rely very heavily on the RBA continuing to ease monetary policy.
Well, we got the RBA minutes from their recent board meeting today, and they actually talked about cutting rates by 50 basis points. I mean, how many more rate cuts are you expecting? We've got next meetings on the 8th of July.
Yeah, so in the press conference, Michelle Bullock, the RBA governor, did say that they talked about cutting by 50, and that took the markets a little bit by surprise, and it really did reinforce, certainly in my mind, that there's more rate cuts coming. So we've actually got 5 more RBA board meetings this calendar year, and I think we'll see rate cuts in 3 of those 5 meetings, so 25 points in each of those meetings. That'll take us down to 3.1% by the end of the year on the cash rate, and I think we could describe that as a neutral monetary policy setting. So we know with economic growth soft, inflation in the target zone, and global economic uncertainty doing nothing but going up, I don't think there's a need for a restrictive policy, so a neutral policy setting makes a lot of sense.
Well, look, this week in partnership with Macquarie Uni, you've released a business outlook scenario survey asking businesses about the impact of tariffs. What have you found out?
Yeah, so this is a survey conducted by Macquarie University, and I'm helping them a bit with that. Surveys 500 companies on not just what they think is going to happen, but some of the scenarios around the outlook. So, not surprisingly, trade-exposed companies in Australia are already seeing a bit of an effect from the tariff war, if we can call it that. This was data from May. So internationally trade-exposed companies are seeing that effect. Interestingly, they've seen an increase in their costs, but they also saw an increase in sales in the month of May. So I think that might have been a bit of a bring forward of activity before the tariffs really settled in. Of course, they were announced in April, then there was the pause, and then things were brought forward in the month of May. So increased uncertainty, being a bit of bring forward of activity, but that volatility is not a conducive environment for a big increase in business investment.
Inflation's now at 2.4%. How worried are businesses still about inflationary pressures?
Yeah, so interestingly, over the last year or so, a year or so ago, inflation was by far the biggest worry for businesses in Australia. And now that's come down and, in fact, been overtaken by global geopolitical worries as the biggest concern for Australian businesses. And I think we all know the reasons for that. So certainly inflation moderating, declining is the biggest concern for businesses. And that really, I think, supports the posture for the RBA to be able to get interest rates down a bit further.
So inflation not as big a deal now as it was in the past.
Yeah, absolutely, and that's reflective in the actual inflation numbers, and the trend for inflation. The outlook continues to look pretty good. The Reserve Bank themselves is targeting inflation pretty much bang in the middle of the target range for the next 2 years.
Stephen Halmarick, Principal at Economics Unchained. Thanks for your time.
A pleasure. Thank you.